than 50 registered, so I'm hoping we'll still have more people joining. I'm Caoilfhionn van Rooy, and I'll be leading today's discussion with Russell Eastaugh. So I am the managing partner of Regan van Rooy, and Russell is our head of African advisory. And we have both had the good fortune to work in in-house roles, and that is the purpose of today's discussion. Now, we know it is hard to keep your attention focused on a webinar, so we would like to make this as interactive as possible. So please do jump in at any point as we discuss if you have any questions. We'd love to hear from you. We will be asking some questions as we go, so please respond in the chat. And if you've any questions or anything to add as we speak, please do drop a note in the chat. So, scariest job in the world, head of tax, that's our position for today. We do think it's one of those jobs that is not regarded as very exciting or very sexy necessarily, but is a very complex and challenging role with a lot of scary bits along the way. And that's what we want to discuss today. So here is our agenda. We will be talking about, firstly, why do we think in-house tax is such a scary job? Secondly, we'll be looking at who are the in-house tax people. So where do in-house tax people come from? Where do they start their careers? Why do they join in-house? What are their hopes and dreams and fears? Then we'll introduce myself and Russell. So we will each explain our own backstories, how we got into tax, and more specifically, how we got into our in-house tax roles. And as you'll see, both of us have since left our in-house tax roles and come back to consulting. So I'm not sure if we're representative of people moving from consulting into tax or people getting into tax, but nonetheless, we'll be sharing our histories. We'll also be unpacking common myths about working in-house. And Russell and I had many chuckles as we were writing these, thinking of all the people who jump often from the frying pan into the fire, thinking it's going to be easier working in-house. Then I think the bulk of our discussion will be around this. So we're looking at what are the biggest challenges when you move from tax consulting to in-house. So as we look at who are in-house tax people, we'll discover that the vast majority come from consulting, and it is a big change to go from consulting to an in-house tax role. And we'll be looking at what are the most challenging parts. And then after that, we will hopefully be giving you some good tips on how to make a success of working in-house. So hopefully how to make friends and influence people in-house. And then our last section is things not to say in-house. And then we'll have space for questions. So we'll try to leave about 10 to 15 minutes for questions. But as we say, if you have any questions or comments as we go, please do put them in the chat. And if I could start now by asking everyone to enter into the chat if they are working as a head of tax or tax manager, and if so, how many years? So you can just say yes and 5 or 2 or whatever the answer will be. It'll be good to get some feedback on the makeup of our attendees. Russell, over to you.
Right. Well, thanks very much, Caoilfhionn. Thanks for the introduction. And just why is this the scariest job in the world? I think, a number of points to start with. My view, tax is kind of bigger than it was before. There's a lot more taxes. They're a lot more complicated. People are getting involved more cross-border stuff, operating in more countries. That adds its own complexity, and loads of agencies applying new ideas to it and trying to make people pay more, bluntly, and be more transparent. So I think a bigger job, and perhaps some bigger downsides to it as well, in that agencies, government and others want to apply more of a big stick to companies if they don't pay enough. So that's the initial point there. Have we got another one?
And I think maybe to add to that, Russell, we're seeing a lot more personal liability on tax folks. So, public officers or senior tax officers actually have liability where things go wrong on the tax side. So we do think that tax is bigger, faster changing, and scarier than it's ever been.
Yep. It's all, and of course, perfect storm. As you're being told to do more and more, there's more and more tax to be dealt with. then you're being told to do it with less. So put you under some stress with your resources. You can't have so many people. What do you want to go to that meeting for? What do you want to go to that country for? That conference, whatever. Now, can't you just automate it and it'll go away? And general pressure on your resources. So do more, but do it with less, and still get it right. And that is my mind so scary. Is that crunch?
Yeah, and I think adding to the do more, there seem to be different tax types and different tax requirements every year. So we've got first we had country by country reporting, and now Pillar 2 and ESG and carbon tax and CBAM. Every year there seems to be another scary acronym, which is something else we need to worry about from the tax perspective. Also, it used to be that the only guy who was in charge of tax was your local tax authority, but now there's global bodies thinking they have something to say about tax. So whether it's the UN or the OECD or ATAF or some of these bodies for taxpayer morality, it seems to be lots of new challenges and lots of new bodies trying to get their share of tax.
Yeah, so most of them are trying to make sure you pay more rather than less.
Exactly.
I call this thing the tech mermaid. We all know what a mermaid is, I guess. Half fish, half person, sings nicely and lures sailors onto the rocks. And I think the point there is, well, I've never seen one. What this creature does is the outcome is a lot less attractive than the advert. And I think that's the case with some technology. So a lot of use to technology, a lot of downsides to it. The implementation time and cost. Does it achieve what it's going to do? Is artificial intelligence the answer to all our problems? Almost certainly not. It'll create some new ones. At the end of the day, somebody's got to still apply intelligence, normal human intelligence to things. And that's you and me, the tax professionals. And technology is not going to make everything go away. And in some ways, it hides the problems and makes them harder to see. So that, I think, is one of those alluring things that people outside the world of tax might see as a great idea, but probably not all it's cracked up to.
And I think to add to that, we also see tech people. So let's say the chief technology officer might decide to bring in a new piece of tech or even a new ERP, and tax is often not invited to the conversation. So this new technology system or new program is kind of pushed down on the tax team, which makes it, first of all, it's harder to integrate tax, but also there's no possibility for upfront optimization to make the tax function easier to run. So yes, lots of challenges there. Then another one, which I think is probably the kind of overarching difficulty of working in tax in-house, which is that you're all alone. You are the sole custodian of taxes within the business, and you are generally the only person who understands tax and cares about tax, or the only team that understands and cares about tax. And I think that is very different from consulting. So when you're in a tax consulting firm, particularly in the Big Four, you might be in a team of 400 tax specialists. Everybody cares about tax. Everybody thinks about tax. For them, tax is the center of the universe. And then you go into business where nobody cares. It's nobody's priority except yours and the team. So it can feel quite isolated and quite scary.
Well, that's all very true. I think that you're all alone until something goes wrong, I think. And then you're not so alone. Then there'll be some fingers and some questions, and that's all a bit unfortunate. But I think that's it. It's a very different environment, and we'll come back to it on some of the issues when you change role. More aggressive tax authorities. Who hasn't experienced this? And it's everywhere you expect it to be. So across Africa, I haven't come across a tax authority that's not becoming more aggressive, but it goes in the more sophisticated European countries as well, and it goes in places where you don't expect it. I mean, to pick on Mauritius as an example, Mauritius Tax Revenue Authority is now asking questions and causing trouble, which we never thought would be in their remit. So it's all getting harder and worse. And add to that the NGOs whose job it is to try and make life more difficult for you, and to put some pressure on tax authorities to make sure they tax big corporates in a way they feel is appropriate.
I totally agree. And I think we are really seeing with more and more globalization and use of automation, how tax authorities, maybe they don't know everything, but they certainly can find out everything. So there's much more information available to authorities than ever more, which gives them more grist to be aggressive with.
That's it, yes. And more information makes them a bit more aggressive. Yep, and then adding tax morality onto it. In the bad old days, if they were bad, it was quite easy. The law says this, that's what it means. Let's do it. And now somebody says, "Oh, but it wasn't really meant like that," or you can quite clearly see it wasn't. There's this slippery concept of the spirit of tax, if there is such a beast. But a lot of people think there is. And a lot of people out there saying, "Oh, companies must pay more; they're not paying their fair share." Whatever that might be, makes life a lot more challenging than in the past, where you could say, "Well, it says that." And that now got to be addressed, because if you don't, then how much time are you going to spend on the PR battle of how you did things right when the world generally thinks you didn't? So
And I
that
think,
makes life that more hard.
yeah, and this is one that has definitely changed over the last probably 10, 15 years. So I think, with the early days of the OECD BEPS initiative back in 2013, when things started kicking off, and then of course that K2 tax avoidance scheme that all the celebrities were doing in the UK, that caused a lot of general reputational questions to be raised around tax, and even discussions by religious leaders around, you should pay the right amount of tax in terms of morality rather than the letter of the law. Whereas up until then, your job essentially as a tax advisor, whether a consultant or in-house, was to ensure you pay the very least amount as required by law. But the bar seems to have shifted. And I think when you go into a corporate, the reputational aspect and the kind of the strategic reputational view of the business becomes a critical element.
Yep, and then I come at this thing of the pendulums of tax. Things change, and they often go in a sort of rhythm. Yeah, one year the fashion will be to outsource your tax department. The next year the fashion is to insource it, so you've got more control of costs or whatever. And then the next year, oh, we need to automate it. Automate something, automate anything, because we've got to be seen as getting with technology. And the next year, oh, that didn't work very well. How do we unpick it? Then on top of all that, you've got the changes. We talked about morality changes, tax aggression, aggressive tax authority changes. But what has happening in your company? Is it being bought by somebody? Is a group about to move its head of a tax role to a foreign country where you're not? And what's that going to do for your career? Is the CFO changing? And if so, what are the new ones' views on what the tax department should do or should be located, and what its purpose in life is? So a lot of those sort of tidal changes that come and go, but it never ends. And I think, like a lot of things, it seems to speed it up. If you go back
Exactly.
20 years, well, life was quite plannable and routine, perhaps, but that has changed.
And I think in-house tax folks are much more susceptible to these type of fashions in tax, because it's very much at the whim of the CFO. And that ties back to the sense of being all alone. You're the only person interested in tax. Whereas although there's kind of fashions to, the next best thing in tax, if you're in a consulting firm, you're much less susceptible, because that is the entire focus of the business. And we talk about that a bit later when we talk about career progression. I think the career progression is or can be more volatile in tax, and it often will depend. There can be a step change in the CFO, for instance, that can lead to, for instance, the outsourcing of the entire tax department, which obviously completely changes the role of the team.
Yep, right. I'm not going to try to translate that. I'll leave that one to Kim to do later. But who are the in-house tax managers? We did a bit of thinking about this, and a bit of reflecting, and even a wee bit of research. And it looks to us like the vast majority of people in in-house teams have come out of the consulting practices. Not just the big four, but even the smaller ones. But generally, that's where they've started their career. Yeah, occasional person who started off in the tax authority. Perhaps that was more common in some countries in the past, but it still happens. And you get some who've joined a large corporate and started their tax career there. But I don't think there's many people who start their life in their teens when they start thinking about where they're going to work. Oh, I want to become a tax specialist. I occasionally hear of them. I've occasionally interviewed them. I'm always a bit suspicious, to be honest. And we'll tell you a bit about our careers later and why that didn't apply to us. But typically qualifications in a lot of parts of the world we deal with, you'd have chartered accountants, CPAs, call them what you will, people with an accounting background and qualification. Often added onto that would be a tax qualification, whether it's the one in South Africa or the Chartered Institute in the UK, Chartered Institute of Taxation, in my case, the Chartered Institute of Taxation in Nigeria, of course, and that sort of thing. And people will often add in other things like MBAs, and I've got a view on how useful those are, but that's not for this discussion. And then their experience. So they'll have started off often in consulting, often quite specialized, and then have come into a corporate world and perhaps come through several different corporates as part of their career path, with different experiences coming out of each of them. But the question then comes back to if you're getting a basic training in a large consulting firm or any consulting firm, is that the best experience for bringing in-house, where you're often going to be very specialized, probably dealing with corporate income tax, when quite often in a company the big issues are not corporate income tax, or at least not home country corporate income tax, but there can be a whole pile of other things. And the question is, there's going to be a great learning path from where you've come from into where you want to be.
And perhaps we can ask all of our attendees to write down if they have come from the Big Four, and if so, or from a consulting background, and if so, how many years you spent there. So you could write, yes, 8 years. That would be helpful for us to see. But certainly from our research, we think about 80% of in-house tax folks come from consulting, and the vast majority of that come from the Big Four. And then we will come on to Russell and my backstory and how we ended up in tax. So one of the things that I think is quite unfair about tax people is I think we're generally seen to be super boring. And, having wanted to be an accountant or a tax person since the day we were born. And as Russell said, I don't think that's the case for anyone. And I think part of why there is an issue with tax people becoming successful and successfully integrated into business is the fact that they are seen as a bit of tax nerds. And one of the things we talk about, interested in nothing but tax. And one of the things that we talk about later is, given the fact that most in-house tax people come from the Big Four, in some ways, the Big Four is actually the worst training ground to come into consulting. So in terms of my career path, I had no interest in tax. I wanted to be a poet until the age of about 25. Ended up, to the great joy of my parents, studying a very practical degree of English literature, Latin and ancient Greek. I did maths as well to keep them happy. And then I ended up doing a master's in maths, was going to go on to do a PhD in pure maths. Obviously a very practical career choice. And then I decided I would take 1 year out between the master's and the PhD to work in London. I was from rural Ireland, so I thought this would be a big adventure. And I applied to what I thought was Anderson Consulting, because management consulting back in 99 was the kind of cool job. Ended up getting a job in Arthur Anderson. I only got a job in tax because I wanted to start in September. I had applied in August, I think it was very last minute. And they said, well, the only roles are in tax. So I joined in tax. So I definitely was not someone who had a long-term passion for tax, very much fell into it. And I think that is quite a common situation. Then I worked in Arthur Anderson, and then subsequent to Enron, we became part of Deloitte for about 8 years. And then I joined a large South African multinational as the head of international tax. Now, at that point, I had loved working in consulting. And I had been brought up to believe that if you're ambitious and hardworking, you will stay and make partner at the Big Four. That's the sort of culmination of your tax role. So I very much took the in-house job against my better instincts, and I did think, oh no, this is a bit of a sellout, but I was quite curious, and it was a very large and interesting role I was offered. And I think given and I was there for about 9 years, really enjoyed it, but found it immensely challenging, the change, and then left in-house back in 2017, and then founded Regan van Rooy. So that's my long and winding road into tax and into in-house consulting. How about you, Russell?
Yep. Unfortunately, I've got probably a bit more years of experience to make it even more convoluted. But yeah, I grew up in Belfast in Northern Ireland in the 70s, and it wasn't the place to hang around. So I went off and studied mining, thinking I'll tour the world as a mining engineer, which has been partly true. And went off to Zimbabwe after independence and dug holes in the ground there. Realised that wasn't a great place to stay. Probably one of my better career choices was to leave Zim, and couldn't get a job in mining. So I got a job with the Inland Revenue in the UK, as you do. I applied for the civil service, but the story is, if they think you've even thought about putting Inland Revenue, or as it was then Customs and Excise, on your form, that's where you got to. So I joined the Inland Revenue, and they trained me, and I found I was quite good at it. So I think it is, again, serendipity. I landed up there. And then my parents were in South Africa. I decided that I needed to join them. So I went off to South Africa, did a year at University of Cape Town trying to become an accountant, and a year in Deloitte, proving I wasn't going to become an accountant as an article clerk, and joined tax again, and spent 10 happy years with Deloitte, starting as a consultant in Cape Town, rising to partner in Joburg, reasonably specialised, and then off to Uganda with PwC running the tax department there, then Nigeria as one of their partners for 13 years, and then retiring because you hit this sudden block in the large firms of time to leave. Then it was, and I joined a client in origins in Nigeria, but South African owned, in the online sports betting space as their head of tax, and did that for a few years, and then eventually we decided that the company had changed a lot, and their needs had changed, and that's when I came back to consulting. So that's my history. I think we made the point earlier about specialization. I think probably I'm fortunate in my Big Four career that it wasn't so specialized. In Deloitte, I did a lot of VAT and pay-as-you-earn and other things, as well as the main corporate tax. When I got to Uganda, I think the first paying job I landed up dealing with was a cigarette excise duty, of which I knew virtually nothing other than it existed, but there's a quick learning curve, and that has been the pattern since. You have to get on and find out what it is going to be. But I think it is useful in coming in-house and having had that very broad range of experiences. Yeah. So that's me.
Great. And now we are going to talk through some of the myths about working in-house.
Yeah, we'll do that. So I've heard a lot of people telling me their reasons for leaving consulting firms over the years. Life will be easier and less stress. Now, I think a lot of people on this call, I'm sure, will be laughing at this and think they thought what? I think what we've been trying to tell you already is not easier. It's a lot more challenging and less structured than the Big Four, and certainly plenty of stress. It's not just year end, but when there's some rude letter comes from the tax authority, or worse, from some NGO saying what a bunch of crooked people you are, it produces no shortage of stress. Is it less well paid? A lot of people I had leaving firms over the years were going because it was better paid, but perhaps
this is an interesting one. I think certainly, I think nobody can beat the salaries of a Big Four tax partner. But apart from those outliers, probably at the lower levels, the in-house roles can be very well paid. Also, a lot of them have stock options. And certainly at kind of manager level, a lot of the reasons that people leave consulting, apart from it being easier and less stressful, which we know is not true, is because they offer quite a good base. And I think one of the other ones, which is quite interesting, is, and it's kind of a myth and it's kind of not, about this less of a career path. So I think it is true that there's less of a structured career path. It's not like the Big Four where you go manager and senior manager and AD and partner. It is more siloed, and as we said, you kind of are all alone in your own universe. However, there are very good opportunities to get outside of tax, I believe, and for a successful in-house tax person, there are very good opportunities to create to expand their role, especially if we can persuade business of the importance of tax and elevate tax so that it's integrated into the business. I think that there is a potentially very interesting career path.
No, I agree. I've had a few ex-staff, ex-colleagues who've gone on and done very well in companies, often moving on from tax, as you said, and some others who have to manage it by going from one company to another, either voluntarily or involuntarily. I had one client, unfortunately, he's passed away. He made a career of working for companies who went bankrupt. Now, it wasn't his intention when he joined them, but it happened. And he, junior mining companies and junior oil E&P companies across Africa, who are high risk, but interesting problems. And I think as a result, his experience was in demand, but it wasn't a particularly enjoyable way of running a career, perhaps. So I think there can be good things. And part of it is choosing the company you go to work for, I think. And then part of it is making your own luck when you get there. Things will come back to about making yourself indispensable.
Yeah, I agree with that. I think it really is about building your own career, making your own luck, as you put it. And this is sort of, to me, an ironic point, and I hope that we don't offend anyone here with making it. But in my view, there is an element of the most nerdy of the tax nerds leave consulting and go in-house. So there is an element of sometimes people who feel they cannot make partner or do not want to make partner choose to go in-house. And generally, if they don't want to go down the partner route, it's because they don't enjoy selling, they don't enjoy having pressure of bringing in revenues, they maybe don't enjoy the kind of elbows out politicking that can be required to get to the senior level, and maybe they're not so comfortable in working outside of their narrow sphere. And of course, all of those elements are requirements to build a successful house, a successful in-house role, to be able to sell what you're doing, to be able to communicate well, to be able to make tax have a seat at the table. So guys, I hope that isn't too doesn't offend anyone. If anyone's got any comments on that, we'd love to hear it. But we have certainly had a lot of experience, both Russell and I, of poor people who think that they're going to leave consulting for an easier life and really end up with a very large, very complex tax role and without a lot of support. So anyone who thinks they're going to do it for an easier life, I'm afraid is going from the frying pan into the fire.
I think that's all true. And I think one thing I was going to add, and I might as well make it now, is that I found over the last 40 years that tax is a people business, and you're not going to run away from it. It's not just your own staff, but you're going to have to deal with lots of other people, whether it's your clients if you're in consulting, or your colleagues who are non-tax colleagues in-house. I think perhaps the one place you might avoid people is working for the tax authority, and even then there's hierarchies to be managed.
I totally agree. And now we're going to look at what are the biggest challenges in coming from consulting into in-house. And I see we've just had a comment about when you move in-house, you really have to get your hands dirty. And that is so true. And I think one of the real challenges is the lack of structure in an in-house role. So here, the first point we have is too much tax. So if you're in a big four, now, Russell, I know it was different for you because when you work across Africa, generally you deal with all sorts of tax. But certainly where I started my career in the big four in London, all I did was corporate tax for UK resident entities. I didn't know anything about VAT, stamp duty, withholding tax, PAYE, other countries' tax, transfer pricing, and I would never even think of customs. But when you go in-house, you are expected to be responsible for all of the taxes in all of the jurisdictions, and there are a lot of different types, and you don't have the luxury of keeping your hands clean and saying, no, I only do corporate tax. You are the guard, you are the custodian of the tax function, and you are required to be responsible for all of those taxes in all of those jurisdictions.
Yep, things you never thought about. You mentioned customs, excise. In a lot of industries, excise is very important, and suddenly getting up to speed and grips with all that sort of stuff is part of it. Tax from Genesis to Revelation, from A to Alpha to Omega, A to B, A to Z rather. You are going to be responsible for everything, and you're always responsible for it. It doesn't go away. The buck stops here, as Truman said. So you're going to have to manage everything there. I think that is a huge thing. I think the other thing coming into that is implementation. In a consulting firm, somebody comes ask you a question, you write them an answer, an opinion, and then they go off and do what they like with it, which could be anything from implementing it in the best way or to chucking it in the bin. In a consulting, in-house environment, the problem doesn't stop that way. Somebody's asked you a question, you then had to get it answered and dealt with in a way that works. I think that was perhaps one of the hugest differences for me. I think that one, and then secondly, making sure people understand what you're saying.
Yeah, I totally agree. And it reminds me of something my dad often talks about, which is the difference between the egg and the pig in your breakfast fry up. So the egg lays the eggs that are fried. So the egg is involved. So that's much like the consultant. You go to the consultant, you ask them for an opinion, they lay the little egg, give you the answer, but then they forget about it. If the egg breaks, it's not their problem. And the in-house tax manager is much more like the pig, who's very committed because it's their rasher that's there on your plate, and they're responsible for everything right from inception to the end. Then the next one is
the other one you made a comment about earlier. There's a difference in a doctor and a mother, and the consultant's very much the doctor, isn't it? And the in-house person more the mother. You've got to nurture the thing and make sure it continues to exist and is healthy.
Well, Russell knows one of my kids was sick last week, so that's why I was mentioning this example. But yeah, the doctor, you come in and they'll look at the ear only, the ear infection. But the mother is responsible for making sure it has all the inoculations, making sure you know when to take it to the doctor, making sure you take the thermometer and take the temperature at all times. So yes, there is in some ways working in consulting is much more academic, and it's very clean. Whereas when you're working in-house, you're really in the thick of it. The next one, which I certainly found a challenge when I moved in-house, is you have totally different stakeholders. So when you're in consulting, you're working with people who are very like you. They're all tax pods, or certainly they're all finance pods who know about the importance of tax. You all have, your interests are quite aligned. You're working in the same direction. Whereas when you go in-house, you're basically alone. Nobody else cares about tax. And the people that you have to work with are often people that you've never even thought of what they do before. So finance is an obvious one. You need to work closely with the CFOs and the finance team. Treasury, they will need to know what tax are needed to be paid where, and you need to keep abreast of them and understand what they need to know when. Company secretarial, of course, they do all the corporate transactions and all the board minutes, a lot of which can be very critical from a tax perspective. HR can be sending people off to various jurisdictions, paying them from different jurisdictions, which of course can have very complex tax implications. Corporate finance is easy to understand. Generally, people have worked with corporate finance type transactions. But even your PR and communications team, going back to the reputational aspects now of tax, and even IT, if they decide to bring in a new ERP or a new IT system, it can have tax implications. So it really requires getting down and dirty with every element of the business and dealing with people doing jobs that you might have had no exposure to before.
I think there's two elements to add on to that, Kid. And one is you'll have a shadow tax function somewhere or other, in that you're not going to do everything. And you've got to get other people to do it for you, whether it's HR or payroll, running the payroll and getting the tax number right. HR ideally not transferring people to the far end of the world for 3 years secondments without telling you, or employing consultants who really look like employees. And through a whole heap of other things, finance getting the withholding tax right, and these sort of things. And the second is people who don't even realize they're stakeholders in your group, which could be the company secretarial people. Have they got a group structure? Is it up to date? Is it kept nicely? Is it accessible? IT, does their system produce what you need when you need it? And other things like along these lines. So a lot of alliance building and network building internally is going to be required.
Absolutely. And that's very important, because actually nobody cares about tax. So when you're in consulting, you come from an environment where people think about tax all the time, and you come to an environment where nobody thinks about tax. But when I first went in house, I was expecting to be almost like a GP sitting there, and people from the business would come to me with their tax problems nicely packaged up for me to look at. And I thought they'd be delighted to have a free advisor in house. But I think often the issue is that they don't know what they need to bring to you. So it's not that people come to you with their tax problems for you to answer. You actually have to go in and find the tax problems.
I think a number of things. One, they don't know there's a problem. Secondly, they don't know you exist because it's a big organization and you're somewhere off the edge of it. I think we mentioned earlier, when you're in a consultancy firm, in the tax department, you're the center of the universe, as it were, certainly the center of your universe, because you're in tax and you're in the tax department. You come to a company, you're not. You're somewhere on the periphery. So I think, yeah, people don't know about you, don't know that they've got an issue, and yeah, don't really care. I think that was one of the challenges I got, I think, is in a consultancy firm, people come and ask you a question. They come, the engagement letter, big fee, smallish fee, a fee, and they obviously want an answer because that's why they're paying for it. And you give them an answer, and then they go away. In-house, yeah, they don't really care. I got the impression sometimes the quieter you were, the happier they'd be, in that they thought that meant everything was fine. But it may not be. It may be a false paradise. But that's the challenge you've got to get over. How do you get people to cooperate with you? How do you get them to understand your issues and their company's issues? And not that you're being difficult and nasty, but you're trying to make life better for all.
Yeah.
Whether it's pay less tax or don't pay so much penalties or don't have so much nasty stories in the newspapers. And these are the sort of things you've got to get across. It's a huge exercise, I think, in building a network internally and getting people to understand your role.
Absolutely. And then one of my favorites is tax accounting. So this, I think, was probably my biggest shock when I moved in-house. So I am an accountant. Russell, I know you're not, although I think you know a lot more about accounting than I do. But I thought about tax as a tax person does. I think about the tax return, the queries with the revenue, and I really only mainly think about corporate tax. Then I would have to work with all of the accounting elements of tax. And that is completely different. And if you're not an accountant, and certainly in continental Europe, a lot of heads of tax are not accountants, they're either lawyers or they've got some sort of fiscal degree. And I do not know how they handle tax accounting because it is complex. But I think the challenge for me in trying to understand how you can take all these different types of tax, including withholding tax and VAT and PAYE, across whatever different tax periods happen to fall within that financial year, and then compile that into one figure for your P&L and balance sheet, and also look at the deferred tax on all those implications. I mean, that is a whole other universe from how most people operate in tax consulting.
Yeah, they get they're just that deferred tax. I've not met very many people who enjoy deferred tax, whether they're accountants, lawyers, or in between. And everybody tries to blame it on somebody else. Yeah, personally, I blame the IFRS standard setters, but yeah, because they made it impossible. But there's some broad principles. But I mean, I can remember my HMRC, my UK Tax Authority training. I can remember it verbatim in the written manuals we had. Deferred tax. You don't need to know about this. I'm afraid to say that's kind of influenced my thinking ever since. But
Yeah.
unfortunately, somebody has to know about it. And somebody's got to do it. And because it's got tax in it, there's a lot of people out there going to think it's you.
Yeah. And I
And
think there are real challenges there in what the financial reporting people want from you in terms of tax and what you want to communicate your tax position to be. And then of course you have the auditors coming in at year end looking at it from both sides, and it can be extremely complex.
yeah, I think the big point there is tax is not just what goes on the tax return,
Yeah.
but it's a whole other things. It's how you build up the accounting charge of both the balance sheet and the income statement, how that splits into cash and deferred. Yeah, what about the other taxes and where do they fit, and who's tracking them? So the fact that perhaps you don't have to pay, or you usually have to collect the withholding tax that can become a cost if you don't deduct it and pay it at the right time, and all these other good things. How do you get in those? And then the accounting for uncertain tax positions, we've scribbled it down there, and I think that's become an increasingly common, relevant, and challenging issue. Because how uncertain is it, and what is the number, and how does it be disclosed? And that's a good subject for fighting with auditors about. I was just seeing the comments here, and somebody agreeing that we're seen as problem creators rather than problem solvers. And I think that is unfortunately true. In my consulting period, in my PwC era, in my spare time, I used to look after risk management, and it became quite clear that a lot of people in the business, in the practice, regarded the risk management people as the business prevention department. And I think it wasn't entirely true, but you can see where it came from. And I think we have to be careful that the tax department doesn't get seen as the business prevention or bad news department, and how to stop that from being the case.
Absolutely.
Budget. Again, in consulting, budget time every year someone comes around, right, how much money are you going to make and how little are you going to pay your staff? And that was broadly the element of budgeting. Now, in-house, you can have two budgets. One is your departmental budget. How much money do we really need to spend on running you lot? And secondly, what is the effect of tax on the company budgets? When are we going to pay tax? How much tax are we going to pay? How much? Especially gets interesting when it's across lots of different countries. But what's that going to look like in the presentation to the shareholders, in the effective tax rate, etc. And it all gets quite complicated. Then as soon as you've done it, somebody's going to change the numbers anyway. So
exactly.
I think adding onto budgets is the sort of 3 to 5 year planning as well, which gets future stargazing, but it still has to be done. And perhaps this is an area where automation has its uses, in that at least you can tinker with it a lot more easily than if it's getting a piece of paper out every time.
Exactly. And that leads us nicely into the next one, which is, just because you're paranoid doesn't mean they're not out to get you. So it can often seem, when you go in-house, that there are sharks around all around, basically waiting for blood. So obviously there's the tax authorities who are trying to find any problems with your tax returns. And of course, if there's a problem, your financial reporting people, your CFOs, your risk people will not be happy if you haven't told them it's likely to happen. Then, of course, there's your external auditors. So it seemed to me in-house, much as we had a lovely, it was KPMG who did our audit and we had a great relationship with them, but it did seem to me every year and every half year end that they were just trying to find an error. So it's like having a very tough examiner. And again, that creates a huge amount of stress. If they find something in your year end or your half year end packs, it creates big issues all the way up to the CFO. Of course, then there's internal audit, whose whole job is to find problems in the way you're running your tax department. There's your risk department, who's trying to find tax risks that you haven't identified. And if woe betide something happens on the tax side that you haven't alerted them to, you're in trouble. And then there's departments like your Sarbanes-Oxley department, who are looking at your segregation of duties. So it can seem like everyone is around you trying to find errors that you're making.
And that's before you get the external tax authority and their audits, and their job is to find your errors, and if they can't find them, to make them up.
Exactly.
Keep you on your toes. So yes, it is certainly a challenging job, I think. And how do you keep up to date? Because tax law doesn't stay static, does it? And if you're operating in several countries, it stays even less static. And that's before we have the multilateral things bolted on top. So how do you keep up to date with it? And it's a good question. I think it depends a bit on your environment, but some external training is probably required. If you're a member of an institute, there's probably going to be something coming. How do you keep up to date with tax changes in, random example, Ethiopia? Because you're unlikely to be a member of the institute there. And I don't have the answer. Probably find two more or less credible firms and ask them to send you newsletters every now and again, and hopefully you pick up some of the news that way. I think one other way is to join industry bodies that have similar industry and can talk about things of common interest, not only giving away their secrets, but at least giving away their common threats. And I saw a commentary earlier in the question in the chat box is saying, build networks. And I think that's entirely true. build a network of people with similar experiences, interests, and likely to have similar issues. At least pick up where these things are coming from. Ask
That's a
advisors.
good point.
Yeah.
And I think also asking advisors to give you regular updates is a good idea. We often do that for clients. We love to do it for free as a way to talk to the clients about things that we could be of interest to them. So I would say go to your top 2 or 3 advisors and say, can you please give us an update every 6 months? Here's the countries we're interested in. Here's the types of issues we have, and see what you get from them. It can be a very cheap and tailor-made way to keep up to date, because obviously in the big 4, it's very easy to keep up to date. You're kind of force-fed developments on an almost daily basis, and they generally have a very good system of training. And then when you're in-house, you're a bit more isolated.
Or considerably more isolated, I think. And yes,
Yeah.
it's got from a team thing where somebody thinks about it for you and says, do this training, to where you've got to go out and think, well, what might have changed and how do I find it? But I think that thing of getting some feeds and getting some trainings externally is probably the key answer to it. Again, a lot of these things will depend on the particular shape of your group and your company and where it's operating and what its exposures are. But yeah, don't forget your CPD, your continuing professional development requirements, and see if you can make that useful as well. Again, if you're a South African CA, persuading somebody that changes in Ethiopian tax law is relevant to your CPD may be a challenge, but it is relevant to you. So I think that's some comments on keeping up to date, which I think is a vital area. The rats and mice, and as Caoilfhionn put it here, rats and mice become your pets. Somebody has to do a number of things in a company. It may be nobody else is very interested in them, such as that corporate structure I mentioned earlier. Who maintains it? Is it up to date? Is it useful? Do you know who your shareholders are? So you can start thinking about UBO disclosures. In fact, who does the UBO disclosure? Who monitors exchange controls? Again, there should be Treasury, but is it? Do they understand the rules in all the different countries you're looking at? Who keeps a track of intercompany balances or even intercompany transactions and their support by contracts? Again, it should be somebody else, but should be and is be maybe different things. And part of your role, I think, as a tax person is to try to make sure these things are dealt with, even if it's not your area, but to make sure somebody's doing it. The downside is if you've shown interest in it, it may be mistaken for enthusiasm.
I totally agree. And it goes back to the point somebody made in the chat about getting your hands dirty. It is possible to be a purist in consulting. It is not possible to be a successful in-house tax manager. You have to be comfortable in dealing with things that are not necessarily within your remit and that are not necessarily their responsibility, because at the end of the day, it's information that you will need to be able to do your job. And then I'm just looking at the time, Russell. So let's go on to our tips. So Russell and I have both transitioned from a consulting role to in-house, and we've got some tips for how to succeed in-house, or as we put it, how to make friends and influence people. And as Ben is doing so nicely there, to balance all your different stakeholders. So I think the key and overarching one is communication. And I was thinking last night that there's a lot in common with moving from consulting to industry, with kids moving from primary school to secondary school. So you guys will all remember your last year in primary school. You know everything. You're the coolest one in the street. Everyone looks up to you. You're the boss. And then all of a sudden you go to secondary school and you're nobody. There's people there who look like grown adults. Their interests are something totally different. The things that made you so cool in primary school really make you very uncool now in secondary school. So I think there's a lot of similarities there. Tax people come from being the center of the universe, as Russell put it, in a very safe environment where everything is sort of put in place for them and they can work on their very narrow area. And then they're kind of thrown in this washing machine where nobody really wants them, because most businesses do see the tax function as a bit of a break, as Russell put it on business. Like, the functions are often seen as kind of necessary evils in running a business. So to be able to successfully integrate, communication is critical. And I think one of the most important parts of communication is to not be a tax nerd. So nobody cares about tax. Nobody wants to hear a whole load of tax waffle, and nobody wants to hear a whole load of acronyms. One of the things we often tell our team is that the days of information being power is gone. There's just information overload everywhere. So our job, I believe, in every part of one's career, whatever their career may be, is to distill the information as much as possible. So when you're communicating within your business, whether it's to the CFO or the CEO or the head of corporate finance or the head of treasury, be as brief as possible. Tell them all they need to know about the specific tax problem impacting their business, but no more, because they do not care. They do not want to know. They've got other things to worry about. And the reality is that most non-tax people, and certainly most non-finance people, regard a discussion with a tax person as similar to visiting the dentist. They know they have to do it. They put it off as long as they can. They know it's going to be really painful, and they basically just grit their teeth and try to think about something else when they're having it. So it is really important to try to communicate in a way that makes you of value to the person you're speaking to. So one of the things we also say to the team is try to have it that so when people see an email from you, they're not going to go, oh no, here's that tax person again telling me more problems or more things to worry about, or slapping me over the wrist about something. But okay, what nugget am I going to get from this person today? And when you have a meeting with them, and it is good to regularly meet with them, make sure they're not, wanting to have a quick Valium beforehand, but that they are expecting you to give them interesting, relevant, solutions-focused points. So communication is absolutely critical because nobody actually wants to talk about tax. So our role is to make the talking about tax as painless as possible.
Yep,
Russell, anything to add on that?
I think that is vital. I think it's probably one of the big challenges. In a consulting firm, to some extent, you think you're trying to be clever. You've got to justify the fee. You write a long opinion, lots of pages. I did used to know people who thought they were charging by the pound, I think, or by the page. In-house, that's not going to be the case. People that your sunk cost. People want to see what the answer is. They want to know very quickly, what is the answer? What can I do here? Can I do this? So I think get that focus on getting the answer there and getting it interesting. It's probably very sensible. Being business focused, I think you've got to get to understand the business. Even in consulting, it helps to know something about the client's business, but once you're in-house, you've got to know it intimately. Where are the operations? What does it actually do? How do we make a profit? What are the steps through the whole process? Where the goods move around to, who gets paid where. But the more you can understand, the better. And the better able you'll be able to advise your company and see where the issues are, and see who you need to go and talk to. And getting to understand it, generally speaking, people like talking about their business. And go and talk to people. How does your part of the business work? Rather than saying, I'm the tax man, I've come to cause you grief. Go and surprise them and say, I want to understand what you do all day and how does the company work?
And I think this goes back to the point I was trying to make about how actually the people who would best succeed in an in-house role are the people who would make partner. They're the people who are interested in looking at things holistically, interested in selling, interested in building relationships, because wherever you work in business, it is not a tax business. It is a business of making widgets or doing marketing or whatever the business will be. And tax always or generally needs to justify having a seat at the table. So in any conversation in a business, there'll be a discussion, should we involve tax? Should we involve finance? You want them to say, hell yes, because Russell is going to bring great views. He's really going to help us move this forward. He's going to alert us to risks that otherwise we wouldn't think of. You don't want people to say, no, he's just going to waffle on with all these acronyms we've never heard of and tell us how we've done everything wrong and tell us how nothing is going to work. So it is up to us to remember we are not working in tax, we are working in a business. And the aim of the business is not to have the best tax function in the world. What we need to do is be able to converse with the business leaders to make tax part of the business rather than trying to, have tax wag the business dog.
Yeah, I think on that as well, just adding a couple of points, is that don't be afraid of asking questions outside your area. In that, if you've had to read a contract and you can see what looks like a commercial problem in it, well, ask. Don't go back and say, oh, this is all wrong, but you say, why have we done this? And see if somebody can answer you. Because again, you'll start seeing being seen as more valuable to the business if you can bring insights beyond just a pure tax one. And if you don't solve a problem, at least you've learned something and you've shown interest in the business. And I think that
absolutely. And nobody wants to feel like you're another auditor. It is really important to be on the same team as the people you're working with. If you were there just to criticize and nitpick, it's not going to work. It's like having a backseat driver versus having a partner in the car who shares the driving with you and gives you directions. That's how we want to be seen within the business. And linked to that is a focus on solutions, solutions, solutions. Nobody cares about the problem. They don't care what the risks are if they do this, that, or the other, and why they shouldn't do it. What they want is a clear solution and someone who explains to them the risks, who explains to them what could happen if it goes wrong, who explains why it is the best solution, but who brings a solution rather than a problem. And I think this is a change from consulting, because a large part, when we're in consulting, a large part of our job is to find the problems with things. No, this can't work because X, Y, Z. But in business, we will have to find problems, but we always have to package it with a solution if we want to earn that seat at the table that will now allow us to have a successfully integrated career in the business.
Yep, I agree with all that. I think there are times when you may have to say, look, this is quite complicated, we need some external advice, but I think fundamentally, you've got to be aiming for coming up with an answer. If not a perfect answer, an answer.
That is a good point. And I think also not being afraid to say, I don't know. I don't know this. I'm not a VAT expert. This is a North Korean VAT problem. We need to get external input. So don't be afraid to say you don't know. And also, don't be afraid to say you're sorry. Don't be afraid to say, I missed that. I should have told you about that last year. That is my fault. Honesty and partnership is the only way for an in-house tax role or any relationship to work. The next one is maybe a bit of a tall ask: get people excited about tax. So, and Russell, I'm just looking at the time, we're going to have to talk. This is the last real slide, so we'll talk quickly.
I think so.
But as we've seen, as Russell has spoken about, often tax, and actually all of the functions, whether it's legal or HR or finance, are seen as a brake on business, an obstacle to business. What we want people to understand is that tax is not just a cost center. Tax is generally the single highest cost a company faces. And if we can reduce that cost, it creates a lot of benefit for the rest of the business. So Formula One is very famous for talking about, does it make the car go faster? Any new initiative, they say yes or no based on, does it make the car go faster? And if it doesn't make the car go faster, like for instance, better uniforms, they ignore it. However, in our view, tax can make the car go faster, because if you save $1 million, you can spend it on something that will definitely improve the speed of the car. So it is definitely critical to communicate effectively and succinctly to your business partners so that they understand the importance of tax and how you can help them improve their business drivers. And then the last point is befriend your CFO. And this isn't just for the CFO, but the CFO is generally the single most important factor in the success of an in-house tax team. But it is really important to understand what your CFO and other stakeholders care about. And I can tell you now, tax is not in their top 3 things that they care about. You need to understand what it is that they care about and why, and what they want from you, and then work with them in a way so that they see you as an ally to do their job. And then over time, you will hopefully be able to turn them into an ally to help you do your job. Now, guys, sorry, we have zoomed through the last few slides. We just have here a couple of funny things not to say in-house, which is basically too much jargon, trying to cover your ass, trying to not give a clear answer, or trying to criticize. In the last minute or two, are there any questions for me or for Russell? We will be sharing the slides and the recording. We'll share them with everyone who is registered, and we'll also post them on LinkedIn. Any questions? Okay, Russell, well, it's
coming through.
It's 2 o'clock, so I think we finished bang on time. Guys, Russell and my emails are here on the last slide. So, oh no, sorry, they're maybe not. But they will be on the one I send out. So please feel free to contact us with any questions or anything else you would like to discuss.
Yeah, thank you, everybody. My note, thank you for your time. Thank you for listening. I hope you find it interesting, and I wish you all the very best luck in your various roles and continued excitement.
Bye, everybody. Thank you.
Yeah, cheerio. Bye-bye.